Hello everyone, PS from PS Invest Plays here today. Since March 2020, Marvell Technology stock has risen more than 370%. Year to date, it has risen 90%. Many analysts think that it is overvalued. Is this true? Or can we expect higher stock price in the future? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Marvell Technologies, ticker MRVL. Marvell Technology is an American company based in Delaware, which develops and produces semiconductors and related technology. It is a leading company in the semiconductor industry with a compelling turnaround story. Thanks to the acquisition of Inphi, the company is delivering above average growth and profitability. This is also helped by secular growth trends in 5G, cloud, and automobiles. Marvell Technology has been one of the best performing companies in the chip sector. Year to date, the stock has appreciated over 90%. And if we go back even further, Marvell has more than tripled since the March 2020 crash. Marvell now trades at 50x its earnings, joining the other high flyers in the industry like AMD and NVIDIA. This uptick in excitement by investors comes on the back of some good results over the last few quarters, including the most recent one. The company divides its revenue segments into networking, which is 57% of revenues, storage, which is 37% of revenues, and others, which is 6% of revenues. Networking consists of Ethernet solutions, embedded processors, custom ASICs, and electro-optics solutions. In other words, Marvell is selling components that enable connectivity in devices like phones or cars. For example, the company sells semi-custom products to Samsung Electronics and Nokia Corporation. Within the networking segment, the company saw revenues increase in all areas. Notable growth opportunities within the networking segment include cloud networking, where the company is achieving success with its smart NIC DPUs, and automobiles. Automobiles is the most exciting growth opportunity, where the company sees a potential market of $1 billion. Moving on to storage, the company has been undergoing a significant transformation, which seems to be paying off. 60% of storage revenues are now coming from data centers. The company has refocused its product line to address this growing market. The acquisition of Inphi in April 2021 has made this possible and increased the company's exposure to data centers. Marvell Technology's fiscal Q3 revenue shot up 61% year over year to $1.21 billion, driven by substantial growth across all 5 of its end markets. Analysts were looking for $1.15 billion in revenue from Marvell, but the robust demand for chips from the data center, telecom, networking, consumer, and auto industrial markets helped it exceed expectations. The chipmaker's non-GAAP net income increased to 43 cents per share in the quarter from 25 cents per share in the year-ago period. The bottom line easily exceeded consensus estimates of 38 cents per share. The sharp year-over-year jump of 72% in Marvell's earnings per share was aided by an increase of 2.1 percentage points in the adjusted gross margin to 65.1% during the quarter. It is worth noting that Marvell's acquisitions of Inphi and Innovium, completed in April and October this year, provided a substantial boost to the company's results. However, Marvell's organic business that excludes these acquisitions also did well, recording nearly 30% year-over-year growth during the quarter. It is also impressive to see that the new acquisitions are enhancing the company's margins and improving its earnings power, as is evident from the jump in its margins last quarter. The good part is that Marvell's terrific momentum shows no sign of ending, as its guidance indicates. The company anticipates $1.32 billion in revenue this quarter, along with earnings of 48 cents per share at the midpoint of its guidance range. The forecast is well ahead of Wall Street's expectations of 42 cents per share in earnings and $1.21 billion in revenue. For comparison, Marvell had reported 29 cents per share in earnings on revenue of $798 million in the year-ago period, which means that it is on track to sustain its terrific performance once again. Marvell CEO Matt Murphy pointed out on the latest earnings conference call that the company is seeing a sharp spike in demand for chips used in the 5G wireless networks. More specifically, Marvell's 5G business is expected to increase 30% sequentially in the fourth quarter, driven by the ramp-up of new products featuring the company's chips. It also points out that it is going to witness a substantial increase in revenue thanks to the new design wins it has scored in the data center and 5G markets. The ramp-up of the 5G business will positively affect the company's revenue from the carrier infrastructure business. This segment accounted for 18% of Marvell's top line last quarter and recorded a 27% year-over-year jump in revenue. The company now anticipates year-over-year growth of 40% in the carrier infrastructure business thanks to the 5G ramp. Meanwhile, Marvell's biggest business has also hit a purple patch thanks to the acquisitions and the increasing adoption of its chips. The data center segment produced 41% of Marvell's total revenue last quarter at nearly $500 million, growing 109% over the prior year period. Just like the 5G business, Marvell says that the data center business is also witnessing the start of new product ramps, which they expect will continue to drive sustained growth. As a result, Marvell says that its data center business is on track to double once again in the current quarter as compared to the prior year period. Meanwhile, the automotive industrial end market is turning out to be another growth hotspot for Marvell. Though the segment produced just $66 million in revenue last quarter, just over 5% of the top line, it recorded 114% year-over-year growth. The important thing to note here is that the segment's growth was organic in nature and wasn't powered by the acquisitions, as was the case with other segments. Marvell credited this impressive growth to the faster adoption of its automotive chips by OEMs, or original equipment manufacturers, and it sees a massive opportunity in this space going forward. Currently, 28 automotive OEMs use the company's chips, which includes 7 of the largest automotive OEMs, and emphasize the company's target of grabbing half of the automotive industry's market share by securing more automotive OEMs. At the company's third quarter earnings call, Marvell revealed that it is seeing a significant increase in compute-related activity with additional auto OEMs, both traditional and new market entrants. This suggests that Marvell Technology is moving closer to its long-term market share goals in the automotive end market with new automotive OEM wins. The company expects the cloud, 5G, and automotive end markets to generate a revenue opportunity of $18.9 billion by 2024, up from this year's estimated $10.9 billion. Additionally, the company's overall addressable opportunity is expected to hit $30 billion by 2024, indicating that it has a lot of room to grow as it is on track to clock just over $4.4 billion in revenue this fiscal year. Marvell's lucrative end markets explain why analysts expect the company's bottom line to clock a compound annual growth rate of 43% for the next 5 years. The huge addressable market also points towards robust top-line growth in the coming years. Although Marvell seems to be on track to deliver on both growth and profitability, there are some risk factors that investors must consider. First, it is important to consider that around 40% of the company's revenues come from China. Trade with China is still subject to political tensions, and so far, the Biden administration is being cautious towards the Asian superpower. Also, in terms of production, Marvell is susceptible to supply chain constraints, especially given the fact that they don't have their own manufacturing facilities. Marvell is, after all, a fabless chip maker, and that comes with both advantages and disadvantages. Lastly, following the merger, the company has increased its debt load, which also means it is more exposed to interest rate hikes and volatility in the bond market. Finally, there is a lot to like about Marvell. The company operates in a high-growth industry and is delivering highly specialized and competitive products in the cloud and automotive segments. The merger with Inphi is paying off as I see notable increases in EBITDA as well as steady revenue growth. With that said, the current PE ratio of 50 won't be sustained long term. Its stock has already rallied significantly in 2020 and 2021. But for investors who still want to gain exposure, consider starting a small position and then buy the dips. It is indicative in the charts where I see the stock price to increase, then experience some pullbacks before it increases considerably in the next 3 to 4 years. Now let's take a look at the chart of Marvell Technology. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart of Marvell Technology, the bull run that started way back in 2001 is still not over. It has completed its first 2 waves and now wave 3 is in progress. Wave 3 is typically 261.8% of waves 1 to 2, which gives us a short-term price target of $98.32. After this wave is completed, I expect wave 4 to resume, and wave 4 is typically 14.6% to 23.6% retracement of wave 3, giving us a short-term price target of $76.83 to $85.11. After this wave is completed, I expect wave 5 to resume, and wave 5 is typically 61.8% of waves 1 and 3, giving us a final price target of $144.64, which translates into an 85% profit in the next 3 to 4 years. Now let's summarize. At its current price, I would recommend that you nibble any pullbacks and accumulate corrections. For me, the accumulation range for Marvell Technologies is a price between $76.83 to $85.11. I would recommend that you hold the stock for at least 3 to 4 years, as I see a price target of $144.64, which translates into a profit of 85% in the next 3 to 4 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.